Welcome to ForexTV.com. Today is Thursday, February 5th. I'm Tim Kelly with your New York Forex Market Buzz. Now for a look at the latest headlines from the CEP News Desk. U.S. jobless claims soared above expectations in today's report and confirmed the worst is not yet over for the U.S. labor market. Initial jobless claims jumped 35,000 in the week of January 31st to 626,000, with the prior week revised 3,000 higher to 591,000. These readings are the highest since the early 80s. Manufacturing in the U.S. continued to take another battering, with factory orders falling more than expected in December, following a downwardly revised loss in the previous month. Factory orders fell 3.9% in December, more than the consensus forecast for a 3.1% drop, and following last month's revised 6.5% decline. European Central Bank President Jean-Claude Trichet said during his press conference today that the central bank is not ruling out a rate cut at the next meeting in March. The ECB kept their rate unchanged at 2%, at what was widely expected by economists. Today we're joined by Dan Cook of IG Markets. Welcome, Dan.
Hello, Tim.
Dan, some exciting stuff today. We saw a big jump after the jobs numbers in yen. Of course, we saw it in sterling. Can you give us a little perspective on what's going on?
With sterling, and we had the rate cut earlier. Typically, and in traditional thinking from a few years ago, would have said, "Hey, the currency cut rates, it's going to be weaker. You know, it should lose value." I think what we're seeing, particularly on the sterling today, is that a country that's trying to make a move to try to help their overall economy. So instead of making that currency weaker, it's actually going to give it a little bit more strength. And that's what we're seeing on there. With the yen, as you mentioned, we've had just a huge amount of weakness in the yen. I do look for that to be short-lived, and it looks like we're probably looking towards a pullback towards the previous level.
Dan, previous levels, can you be specific about where you think we're going to pull back to?
I think over the next day, and again ahead of non-farm, we should see the market slow down a little bit as we move into the later afternoon hours here. But pulling back around to the 90 level would not be surprising. We just saw a huge uptick in all the crosses as well. Pound, euro, and dollar all gained significantly against the yen. Kind of in an extremely surprise move, actually. But we did hit, particularly the U.S. dollar yen, we hit a pretty strong resistance level right around the 92.30 level, and we really look for that to pull back closer to the 90 level.
Okay, yeah, I'm just looking at the data center here. We had a low of 89.19 and a high of 92.23. It's 1:30 p.m. Eastern Standard Time, and we're now trading right in the mid-range at 91.36. So you feel maybe another 100 basis points by the time Asia signs in?
I think that could be expected. That's really what I'm looking for. Again, as far as from a trading perspective, I'm going to take the wait-and-see attitude. After a swift move like that, it goes back to that old analogy of, do you really try to catch a falling knife? And so that's what we're looking for, is the pullback. But again, after the move that we saw, going to kind of wait and see what the rest of the day holds.
Dan, the sterling has fallen off the highs as well. Not quite in the mid-range, still above the mid-range of its trading range today. Do you see that abating any further? And with that, I think that there's a technical play, perhaps, and maybe you can just comment on that if you're hearing anything about that, and that we haven't even reached the first retracement level on the Fibonacci retracement at 38% in sterling at this point. So could this be a technical play to reach that first threshold?
This could be a technical play, and I'm really looking at those levels as well. We have a pretty strong trend down, obviously, for the last several months. And while we've seen the pound gain some strength since about January 23rd, it definitely hasn't broken to the upside at this point. I think what we've seen is just a very small retracement when we look at the big picture. Probably anywhere between the 147, 148 levels. Probably 147.70 is actually a level that I'm very interested in from a trend line, and a couple of even on shorter term fib ratios where I'd look for pretty strong resistance.
Dan, what are your thoughts going into tomorrow's non-farm payroll reports? We're going to see same volatility throughout the next 24 hours, and if so, any thoughts about where we go?
I think the knee-jerk reaction after the non-farm, as expected, will be a monstrous swing one way or the other. Typically, the knee-jerk reaction is a crucial part of that. Right now, they're calling estimates right around 530,000 loss. But as we saw from the surprise unemployment claims today, the number could be much worse than that. If it is, it's kind of hang on to your hat at that point, because we could see some pretty wild swings.
Sure. Dan, thank you as always. I appreciate you coming on today.
My pleasure. Thank you.
This has been your New York Forex Market Buzz with Dan Cook of IG Markets. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on forextv.com.